Imagine waking up on a normal Tuesday, and by lunchtime over $200 billion has just evaporated from the world's biggest software companies. Names like Salesforce, Datadog, and Snowflake, crushed in a single trading session. It wasn't because of bad earnings, it wasn't interest rates. It was triggered by a single, frightening 7,000-word PDF that went viral on trading desks. It's being called the Citrini Research report. And while it reads like a piece of dystopian science fiction, Wall Street didn't laugh. They panicked. This document outlined a future scenario so compelling and so destructive to the current economy that it triggered an immediate sell-off. So, what did it say? Here is the core idea that spooked the market. For the last decade, the comfortable assumption has been that AI will simply make white-collar workers more productive, boosting corporate profits. This report flips that assumption upside down. It argues that right now, high-level human intelligence is a scarce economic input. Companies pay huge salaries for accountants, coders, and strategists because that brainpower is hard to find. But highly capable AI agents are about to make high-level intelligence abundant and virtually free. Think about a modern software company. They aren't selling physical goods. They are effectively selling packaged human intelligence, code, strategy, and analysis. The terrifying question this report asks is simple. What happens to the value of your multi-billion-dollar company when an AI agent can generate the exact same thing you sell? Infinitely, for pennies on the dollar? In economics, when the thing you sell suddenly becomes free, your business model doesn't just change, it collapses. So, how does that theoretical business collapse turn into a real-world economic disaster? The report lays out a specific mechanism. It's being called the Deflationary Death Spiral. Here is how the loop starts. As highly capable AI agents are deployed, they don't just act as assistants, they begin to replace entire departments. We aren't talking about automating blue-collar factory jobs this time. We are talking about replacing 200,000 a year lawyers, senior accountants, and mid-level software engineers. These are expensive roles, and for a corporation, eliminating them is the fastest way to boost short-term profits. But here is the catch. These high-earning white-collar workers are also the economy's biggest spenders. When a massive wave of high-income professionals suddenly become unemployed and realize their skills are obsolete, consumer spending crashes. They stop buying new Teslas, they cancel expensive vacations, and they stop subscribing to premium software services. This triggers the next phase of the spiral. Aggregate demand across the entire economy craters. Suddenly, companies, even those outside of tech, see their revenue freefall because nobody is buying anything. Facing collapsing revenue, these companies become desperate to cut costs just to survive. And what is the only tool left to cut costs further? More AI. They deploy even more aggressive automation, firing more remaining staff, which deepens the spending collapse. It becomes a self-reinforcing race to the bottom, where the only winner is the AI infrastructure itself. Now, is this just sci-fi fear-mongering? The biggest counter-argument is history. Every major technological shift, from the steam engine to the internet, ultimately created more jobs than it destroyed. The optimist says AI will simply unleash a new wave of unimagined human creativity in new industries. But the authors of the report argue that this time is fundamentally different. They argue that cognitive labor, the ability to think and process information, was the final frontier of human economic utility. Once a machine can do that faster and cheaper than us, there is no higher ground for human workers to move to. So, if you are a major investor and you believe even 10% of this doomsday scenario is possible, what do? We are already seeing the start of the great rotation or the safety trade. If SaaS company revenues are going to zero because their product is becoming free, big money is fleeing that sector. Instead, capital is flooding into two specific areas that AI cannot replicate. First, hard assets. Things that exist in the physical world that an algorithm cannot print. We're talking about prime real estate, energy infrastructure, precious metals, and complex manufacturing. Second, the pickaxes. During a gold rush, you don't bet on the miners, you bet on the guys selling the shovels. In this case, it's the physical infrastructure powering the AI revolution, the massive data centers, the energy producers that power them, and the advanced microchip manufacturers. The market is betting that even if the AI economy collapses human labor, the machines running that economy will become the most valuable assets on Earth. So, Is this a temporary panic or the start of a new economic era? Let me know your take in the comments below and subscribe to Stacks Explained as we track the money behind the machines.